Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and November 1st. Wow, new month, heading into the holiday seasons here. Time flies. Let's jump right in here. We got a few economic news releases, a lot of news today, so we'll just jump right into it. We'll start off with the ISM, which is the manufacturing, and we had 51.6%. We figured an increase, and it actually dropped a little bit here, down to 50.8. So had a rebound. So we probably noticed that with our Chicago PMI, with our New York Empire Index, Philadelphia Fed, and such down there, that we've seen manufacturing taking a bit of a hit. So this probably isn't really something uh, to really be unexpected is the word I was looking for. Construction spending, we have 1.4% increase the previous month. We figured it would drop down the increase 0.1, but it was a little bit better. It was up 0.2%, so not too bad here. So we'll jump over to the headline news, and this is which is you'll see here. We have the stock market's way down today. The we're now the Dow's now down below 12,000, and we're about 250 negative, down 250 so far this morning here. And why is it? Well, we had a huge surprise. Greece calls for a referendum on the austerity measures. You would think they would have done this prior to going to the summit last week, but for some reason, he decides to do it now, and the whole market stirred the whole entire investor market right now. So everybody's on edge to find out what's going to happen, what's going to go on. Are they going to not accept this? 60% of the country doesn't like the austerity measures, so there's a lot of pressure going on for them. And again, as I've said before, this is just the tip of the iceberg. Greece is just a small cog in what's going to be a greater whole as to what's going on, and Italy is another one that could be very well in this. And as we mentioned, the pigs, we got Portugal, Italy, Ireland, and Greece, and Spain. And Italy is the third largest country in Europe. I mean, third largest economy in Europe, and they're gonna obviously want their measures as well. And this is gonna be pretty big. So, also another one, Chinese manufacturing continues to slow down, and everybody have seen it, but it's kind of getting to a point where everybody's like, "What's gonna happen?" I mean, everything's pointing to a double dip recession, and we're trying to slow it down. That kind of forces everybody else to slow down as well. So let's see how all this is affecting the bond market where we're at. As we said, we had a huge opening gap yesterday. We probably closed about 100 basis points from where we left off on Friday, so it was a pretty big day. And then we had another huge opening gap here. We're currently about 3 plus 3 today, but we had another big opening gap here. As you can see, we're starting to get a trendward upwards here. At some point, these are going to close, but right now, with all the volatility in Greece being mentioned, this could sustain itself for at least a few days until we get some type of resolve. But right now, interest rates are kicking. We're getting back to high levels where we were before, when we were at some of the best rates. Again, I would kind of lock in near term if we're going long term. Floating will probably be okay, but near term, I would definitely kind of lock in because we don't. This could quickly change on a dime. And again, these will be filled in at some point. So at some point, we're going to be dropping downwards to fill those gaps, those opening gaps upwards. All right, folks. So stay tuned, and here's my a little offer for you folks.